I'm Greg Hunter. Welcome to USAWatchdog.com. Well, there's a return visit, but I guess they haven't had it in a long time, so he's almost like a brand new guest. But he manages about $1 billion of his own investments with his own name, Merk Investments. It's Axel Merk. Axel Merk, thanks for joining us today on USAWatchdog.com.
Great to be with you again.
We were talking in the pre-interview about the unbelievable shape the economy is in, and it's people aren't paying their light bill and their gas bill and their moratorium on rents and mortgages, and that's all probably going to be coming to an end. Where do you see we are in the arc of this economy and your investments?
Well, it's a recovery, isn't it? Right? Recovery is defined as going up from the bottom. And there's a slowdown in this recovery, even though we haven't gone up much from the bottom. And I think they will have a whole bunch of bad news, but somehow underneath we'll have slowly some repairing happening. And the one thing that I'm pretty sure, no matter who gets elected, will be throwing an awful lot of money at this, because we're going to try to stabilize something that's gone. And so government is doing what they're always going to do, with a big difference that this time around they have learned that, hey, a trillion is really nothing, so might as well spend a trillion more or so. Everybody's learned that the Fed is there to finance it, and so whoever's going to get elected is going to pursue something. And the one thing I think we know is government is going to get bigger in that process.
And gold is having it on Friday, had a nice pop on gold. Silver, nice pop on gold. Do you see any kind of big corrections coming in gold and silver, or is the word out? Listen, they're like you. They're managing money, a large amount, pretty large amount, $1 billion, and they're saying, well, they're going to keep printing money. So how can gold and silver be retracting? It's good. They're going to be advancing, or am I wrong?
Well, as anybody who's been investing in gold for a while knows, it can be notoriously volatile. There are three types of investors that I would see, or I see. One is the folks that are concerned about the deficits. They're concerned about real interest rates. The Fed promises to keep long-term rates low. And even as the economy improves, keeping the rates the same, that means net of inflation, you'll get less and less. And so there's the fellow who says, well, hey, if I don't get compensated for holding cash, I might as well hold gold. And the second, and those guys are in there. I think we'll see more people come in. The second type of investor is the diversifier. Gold in the long run has a near zero correlation to equities. Recently has been more correlated. But if you think there's going to be a bear market, gold is one of the things you can use to diversify. And we see more institutional interest in gold because of that. And the third one is the speculator. They just love to have a good trend, and they ensure that that our stomach gets turned upside down once in a while. And so that will exacerbate the moves. And so, of course, I don't know what gold is going to do tomorrow. But I, at least for myself, am reasonably confident that gold is going to do quite well in the coming years. Now, all that said, obviously, because it is so volatile, my speech is regulated. Everything I tell you, the regulators will put under the microscope, and so I can't just tell you to go out and buy it. I'll have to tell you, go and do your own due diligence on it. And by the way, on that, I actually mean that you have to make up your own mind. If you just listen to the next soundbite you hear, you don't know what the hell is going on in the market, and you're going to be losing money almost certainly.
They're talking about another stimulus package. We've been back and forth on this. The president last week said Pelosi's not negotiating in good faith. They're talking about standalone packages, and then yes, and then no, and then we need stimulus, and no, we don't. The president also has control of, I think, $1.8 trillion in the Treasury, so he can continue unemployment benefits. I mean, where do you see the political punditry and warfare, basically? Where does that leave you and me out here, John Q. Public, we the people?
It leaves us, well, it leaves us where we have been for a long time, right? I mean, the president has said that it's a negotiating tactic to walk away from the table, and that's exactly what we saw. He says the deal is off, only to come back the next day. We shouldn't be surprised at any of that. I think in the coming weeks, not much is going to happen, but ultimately, both parties want to have a stimulus. The Democrats want to give money to the states more, and the Republicans want to give the money differently. Usually what happens when there's compromise in Washington, you're spending money to make everybody happy. So it's kind of the largest denominator, not the least common denominator. And whether that plays out remains to be seen. What we've seen in the markets is whenever the stimulus talks are off, we're pricing in that the economy is slowing down and that real interest rates are going up. We talked about gold earlier, right? That's why gold has been selling off sometimes when those stimulus talks are called off, because then real interest rates are higher. Whereas when the fiscal expansion is going to happen, saying, hey, we're going to be happily spending the money. And so that's why in the short term, gold has been sensitive. And so you just have to make up your own mind where you think this is going to play out. I would think that with either administration, we're going to have very substantial spending. I just take one thing that hasn't been in news as much, infrastructure spending, right? I mean, that's a great way to have shovel-ready projects. And by the way, one big difference to the stimulus discussions after 2008 is that the sort of programs under consideration have much more direct consumer impact. You asked about the impact that it has on everybody, right? When you have these shovel-ready projects we had under Obama didn't really impact consumer inflation, consumer purchasing power, whereas the sort of programs we have underway, including infrastructure, will have a more direct impact on consumer spending, and with that, by the way, on consumer prices as well. I think the programs we have underway are more inflationary than the sort of, say, corporate tax cuts that were underway in recent years that are much more indirectly inflationary only.
We can't keep doing this. I mean, we had $3.7 trillion in September of 19 for the Fed's balance sheet. It's now seven, it's doubled. People like Noby Prinz comes on and says, the Fed's telling us they're going to expand it. People like Jim Rickards I've talked to on the phone, he goes, oh, it'll be 10 trillion, 12 trillion. I mean, when does the dollar go poof? Friday, the dollar took a spanking and gold and silver vaulted higher, but that's a one day does not make a trend. When does the dollar, what happens? When does this thing break? How do you envision this thing breaking if it is going to break?
First of all, I think currently we're still in a somewhat normal environment, if I can say that, in 2020. We had in the springtime, we had a flight to the dollar. Basically, everybody had been borrowing, and then when you have a panic, it's like a margin call. When foreigners borrowed money, they had to repatriate the money to reduce the leverage. And now, as we are reflating the world, printing a boatload of money, people are borrowing dollars and investing abroad. And so that's more of a normal cycle in that sense. And I think because we have a wonderful printing press, that sort of trend will continue. And I think the secular bull market in the dollar we had for several years has come to a turning point this spring, and we have a secular bear market. Now, none of that means we're going to have the sort of breakup scenario that you're talking about. Who knows when that comes, right? These things go until they don't. And nobody knows what exactly the breaking point is and what will be done about it. We do know, yes, that it is unsustainable, almost by definition. But we also know we have a darn good printing press. What I'm concerned about is that things like MMT, modern monetary theory, is no longer just some fringe talk. We've had Pelosi say, "Oh yeah, isn't it great what the Fed is doing?" And now we got to finance some of our government programs as well. And the Fed has been all but willing to do it. Powell testifying or talking, he didn't testify, he had a speech this week where he pretty much said, "Hey, we got to have more fiscal spending," and implying that we'll have your back, type of thing. And so that can always go for a while. The one thing I think people don't realize, when I just mentioned earlier as well, hey, we may have inflation pickup. Inflation ultimately is a function of inflation expectations. And that may sound like a circular argument, but if you think about it, if you think prices are going to go higher, you're going to demand more. And so it's like a vicious cycle. And so what you want to watch for is that when different parties kind of start suddenly taking abnormal price hikes. And also inflation is not uniform. It's not like every price is going to go up simultaneously. You have inflation pop up in different areas, and people are going to shrug it off. Don't worry about it. It's just toilet paper that's going up in price. It's just this going up in price. And then suddenly, oh my God, everything is going up in price, right? It's going to come and whack you at some point. And that's why it is so difficult to kind of gauge when the turning point is. And also, by the way, the time to buy fire insurance is not when the fire is there. If I told you kind of 15 years ago, where we're going to be today, you're going to throw up your arms. What the hell, right? You've got to have a long-term plan and think about the risk scenarios. The markets take scenarios into account, and so if and when the world is burning, it's kind of too late to get prepared for it.
Do you think gold's going to go much higher? I've heard all kinds of numbers on gold. Can you put a number on where gold is going to go relative to how many dollars they printed and euros and yen and yuan and everything? Everybody's printing money all at one time. I mean, it's not just the Fed.
I always reluctant to put a specific price target on it, simply because you just have to revise it whenever you get to it. Now, the one thing I would like to say on it, though, is gold is barely related to anything. Correlated to anything. The one thing it has a closer correlation to than most things are real interest rates, and that's interest rates net of inflation. And there are different ways of looking at it. Most people just look at the CPI or variant. What we look at is the 10-year real rate. So you can look at the difference between the 10-year bond and the tips. And so when you look at it at a 10-year level, you actually see quite a good relationship between the price of gold. And so if it's those longer term inflation expectations, that's what the price of gold is related to. And if you think about it, it kind of makes sense. If you get compensated for holding the government paper, well, why should you hold gold, right? But if you don't get compensated, then this barbaric relic may not be so bad after all.
So, Axel, what about silver? I always ask the little guy question because I'm a little guy. Should people be dollar cost averaging silver? I mean, it's half the price of its all-time high in 2011. I think it got up to 50 in 1980 and 50 in 2011, and it's 25 or 20. Had a good day on Friday. Should people be dollar cost averaging silver?
I look at silver as a more volatile commodity than gold with an industrial component, and the dynamics are more difficult to assess. I like gold. Now, by all means, I think the gold to silver ratio is going to move in favor of silver over time, but it's ultimately a question of the sort of risk profile that investors are looking for. Cash has a role in the portfolio, even if the purchasing power gets eroded because of the lack of volatility on a daily basis. Gold, I think, has a role. Now, if you go to gold miners, it gets more volatile. If you go to explorers, it's extremely volatile. And so similarly, silver has a role to play. It's really a question of what sort of investor one is, and in a diversified portfolio, it may very well find a place. Yes.
Do you think that we're going to have even if the election comes out, and a lot of people say it's close, I personally don't think it's going to be close. I think it's going to be a blowout. If you look at the 8 people coming to see Kamala and Joe Biden this last week, I kid you not, But do you think we're going to have a volatile post-election season, and what's that going to do to investments? How are you viewing it? How are you playing it?
Yeah, one of the things we do in our shop, we look at what risk is priced into the market, and you can do this in various different ways. One of the ways you can do it is what the folks who write options, what premiums they're charging, and sure, it's elevated, but it's not pricing in anything chaotic, and of late, it's actually pricing in less of a risk. Yesterday, I had a long discussion, it was a private discussion, so I'm not going to name him, with a fairly well-known conservative commentator in the markets, and he was talking about Trump in the past tense. And I pointed out to him, and he said, yeah, he's gone. Let's move on. And of course, he obviously is trying to make a statement as well, but the markets are not pricing in a panic. And also, if you look into the prediction markets right now, there's even a betting market. There's a betting market on when the results are going to be known, and so that has priced in less tensions that the results are going to be known sooner rather than later.
Wow, that's a nice little piece of news right there. The markets are not pricing in a panic. What do you think that means?
Well, if that is correct, right, then what you see is what you get. Then meaning the markets we see right now is pricing in a Biden presidency. If that's what it is, right?
Or a Trump presidency.
Or Trump presidency, but that's based on the prediction markets. Now, if you look at, and I come back to what I said earlier. In
other words, one way or the other, the markets are pricing in a clear winner.
Yes, but the one thing I like to say is we always think that things are going to change so much. And we get all wrapped up about what it's going to be. Take the COVID response, right? Biden says, oh, the states should have good rules in place. Well, that's the Trump policy, for goodness sake. It's just that we love one guy and hate the other guy. And when it comes to the things I care more about, fiscal spending, as I said earlier, yeah, we're going to spend a boatload of money. They're going to spend it a little differently on different priorities, but they're going to spend a boatload of money. They're politicians. They can't help it. Now, one big difference is, of course, with Trump, we're probably going to get a reduction in regulation, in regulatory burden, and with Biden, an increase. But hey, we have a Trump administration. A few days ago, our office spent about 5 hours filling in paperwork for California, that is, on signing up to collect money for sales tax, even though all our sales is exempt. And so I really, in my business, I haven't seen my regulatory burden go down with either president or either administrations over the years. But we get all excited about who's going to run the country next. And so I've become a cynic over the years. And even though the world is, of course, going to come to an end for whatever side you're rooting for, and if that person is not elected.
A political atheist. I like that. But let's talk about the real deal. The revenues in states like California, number one, are imploding. Number two, their deficits are exploding. Revenues imploding, or confiscation, whatever you want to call it, imploding, and deficits exploding. New York City, 90% of the offices are empty. They are going crazy trying to tax everything that they can get their hands on because their revenues, their confiscation is imploding. People are fleeing California. People are fleeing New York. I mean, you've got some awful backdrops here. Actually, no matter who is in these liberal states, they're doing worse than the red states.
Absolutely. Take California. If you run a business and have a loss, you can carry that loss forward to the next year. And the state of California decided, nah, we're suspending that. So basically, if you had a loss in 2019 and a profit in 2020, you have to pay taxes. Whereas in a normal world, in most countries around the world, most states around the world, if you have a loss in 2019 and then a gain, you can carry that loss forward. So the state of California is desperate for revenue, and they decided to suspend it. So that's the sort of gimmickry that's happening. And yes, the numbers don't make sense. I mean, on the federal level, we have a printing press. On the state level, we don't. Yes, I do see that.
Are you considering leaving? Are you considering leaving California?
Well, never say never, right? I have 4 children. One of them is still in school, and so while that child is still in school, it's probably a big hurdle to pursue. And so that's probably why not at this stage. But yes, you got to keep an open mind, and no state should take it for granted that their taxpayers are going to stick around if they get squeezed too much.
Do you think the states could get into some? They're already in big, major fiscal trouble. Do you think the states could get into even more fiscal trouble and cause a even bigger depression than we already are seeing?
Well, you asked earlier what's going to break the dollar, right? I mean, something is going to break it, and we don't know. Maybe it is. I mean, I talked to some economists the other day, and they said, "Oh, it's going to be Greece." Well, I think Greece is a known problem. I don't think that's where it's going to come from. It's probably going to come from somewhere we don't know. And yes, the states are good candidates. And who knows which state it's going to be. And if we do have the Democrats have a sweep, maybe they bail out the states. But I'd like to also, nobody here is old enough, but Hamilton, he bailed out some states, and that wasn't perceived so well. And so we have quite a polarized electorate these days, and if we're going to bail out the Democrats, I don't think the other states are going to like it, and so it's those sort of issues that, and that's why, I mean, think about in a marriage, right? Marriages often break apart over money, and so similarly, if we don't know how to do our budgeting, there's going to be some big fighting. Now, again, we got the Fed that's probably going to help everybody out, and so we're going to patch this thing up probably longer than we can imagine. Kicking the can down the road was a big thing after 2008, and we have been very good can kickers over the years. So I'd be very reluctant to know what exact turn this is going to take tomorrow.
And what about the possibility of war? You have things settle down in some parts of the Middle East, and yet Turkey and Armenia and Azerbaijan heating up hot.
Well, the one thing is that we have a country that's distracted with domestic issues. We do have other players that know that we're probably the weakest we've been in a while, and it's going to be taking a little bit until we get our act back together, especially if there's a contested election. And then we got the China. I think that's the biggest threat out there because they are the ones that actually can cause some significant damage. That really would like to get Taiwan, quote unquote, back home. And so we got to be very careful that somebody isn't overplaying the hand here. And so in the past, yes, in the past when we've had related situations, it has often led to conflict, and I'm not predicting we have a war in January, but I do think that we are naive to think if those sort of scenarios aren't important. And one of the things, I mean, the Chinese these days could shoot down or blow up an aircraft carrier, right? So we are not as strong in that region as we'd like to be, and we have to build up some very serious things in order to be credible when we say we would defend Taiwan. So that's kind of one point, that one spot that I think we should be paying close attention to. There are of course other potential more minor hotspots in the world as well. Yeah.
We get into a shooting war somewhere. What happens to gold and silver? Because right now things are relatively calm.
Well, in a crisis, gold often shoots up, and then it depends how it evolves, right? And we get they take terrorist attacks, right? Price of gold goes up, and then we get used to it, and then it comes back down. It really depends how it is evolves and so forth. So it's not easy to say. Usually, crisis means that's good for gold. I don't like buying gold because of a crisis, because crises tend to get resolved, but because then it tends to be short term. But yes, in the short term, when there's a crisis, it tends to be supportive for the price of gold. Absolutely.
One thing you would tell consumers, just in general, to be thinking of or doing in their portfolio, given that today's climate, the polarization, the burning down cities, the Speaker of the House wants to now use the 25th Amendment to remove the president. I mean, it's nuts. What would you tell people to focus, to tune out, and what would you tell them to tune in?
Well, tune out all the noise and think about what your plan is, what you want to achieve, and then think about how you want to implement it, and then do it. As even a discussion here, right? We've talked about things flip-flopping all the time. Stimulus on, stimulus is off, and so if you're going to react to every single news bite that's out there, you're going to drive yourself nuts, and you're probably going to lose money. And so you can say, oh, all this money printing is going to increase asset prices, or you can say all this money printing is going to increase the price of gold. I always want to look for diversification, and so gold is one of the things I like. I do some other things with currencies as well, but that's not for the mere mortal, for the most part, because it's just too complicated. But the one thing I do know is that you want to spend less than you're making, right? That's not exactly investment advice, but because we live in such uncertain times, you want to make sure that your money is going to last you, right? And then, of course, the reason we invest is because we think that inflation is going to erode our purchasing power. The question is how to do it. And I don't have a crystal ball. I happen to like gold, but I also have some equity exposure, right? I mean, I even have some exposure in China. And I just said, hey, there might be a war with China. And it's about diversification. I own real estate, right? And so it's about diversification. There's some stuff that's going to do well, some stuff that's going to do poorly. I probably have more gold than many people do, but that's because I can take that from my personal risk profile.
Axel Merk, Merk Investments. The website is merkinvestments.com or merk.com.
Merkinvestments.com.
Yeah, merkinvestments.com. Okay, merkinvestments.com. Yep. I'll put the links up. You also you write content for your site. You're a smart guy. I haven't had you on in a while. I'm glad to have you on now. I mean, it was a good time for you to come on. Thank you so much, Axel Merk, money manager of $1 billion Thanks for coming on and sharing your analysis and your brain power and your expertise on usawatchdog.com.
Thank you. And if you want to follow me on Twitter, you can do that. That's probably the most timely things if we do publish something. My Twitter handle is just my name, Axel Merk.
Axel Merk. Okay, super. Thank you so much. Thanks for joining us today on usawatchdog.com.